Lofi Finance. I'm really glad to have you all here. I'm really glad that with everything going on with GameStop and AMC, that there's been a lot of excitement and interest generated about something that I'm really passionate about personally. I asked you guys on TikTok, what did you want me to talk about? Did you want to hear about my own portfolio? Did you want to hear about some projections when it comes to what's going on with GameStop? And you guys said that you wanted to hear about my portfolio and what I'm investing in. And I'm really happy because this is a lot more akin to what you can expect when it comes to finance. So I'm really glad that we're able to talk about this tonight. So I'm going to go kind of company by company through a series of videos talking about my portfolio. So this is going to be one of several videos since I really just want to focus on one company each time. The company that we're going to be talking about is going to be MGM Resorts International. They make up 9.91% of my portfolio. They're a company that I really believe in. I believe in their long-term success. And I'm going to tell you guys a little bit about what they do and then why I believe in them and why I've held them for so long and will continue to do so. I do just want to say, once again, I'm not a financial advisor, so what I'm going over here, these are my personal opinions, but I can't tell you what to invest in or why to invest in it. And I wouldn't want to, because everybody has different reasons for investing. Everyone has different strategies, and your strategy and your reason for investing is probably going to be different from my own. So I wouldn't want you to just take my word as gold. I have been wrong before. I've lost a lot of money before. You win some, you lose some. So please don't just take what I'm saying as gold and then go buy something because I like it. Do your own research. Look into it, and hopefully as we make more videos, I can at least give you guys some tools for figuring out what your strategy is and kind of understanding the market. So just want to make sure I got that out of the way before we went any further. They have a pretty good variety of things that they do. They have casinos, they have resorts, they've got convention centers, they're part of the entertainment industry. They have a 42.5% ownership stake in the T-Mobile Arena over in Las Vegas. So they're pretty diversified, and that's something that I really appreciate because diversification within a company is something that is going to help them, especially during times of economic uncertainty, because you have multiple revenue streams coming in. So if one area of revenue is halted or slowed down, hopefully you can cover those losses or cover that slowdown with the other areas of your business. It's something that you should value within a business, at least something that I do, and it's something that I value within my own portfolio. I'm not just invested in this industry for the same reasons that I think it's good that MGM Resorts International is invested in a variety of different things themselves. My return has been 79.53% on my investment. So that's pretty good. I'm pretty happy with how they're doing. A lot of people probably would have sold based off of that return, but I believe my return is going to be higher because I believe in the long-term longevity of what they do. And there's a couple reasons for that. One, they are diversified over a pretty good variety of things. They have a very good reputation within the industry. They're good at what they do. They're a healthy company, and they're also uniquely positioned overseas as well. And we're going to kind of get into that too. Every company in every industry was impacted by COVID-19. So when I'm looking at companies, I try not to hold things that they can't control against them in this situation. But with COVID-19, they did pretty well, and that's because the nature of their business. So when the economy is good, people go to casinos, they go to resorts, they celebrate, they party, they drink, they gamble. And when the economy is bad, they tend to do the same things. And so you had a lot of people who they would get their stimulus check and they would take that money and they would gamble with it. So they've done pretty well because of that. They've also done well because of things like their stake in the T-Mobile Arena. They've done well because they have holdings overseas. They have convention centers for corporate clients. That is a really, really valuable revenue stream for them. I also mentioned that they have holdings in China, and I want to talk about that here. So I have followed what's been going on in China for quite a while. I've been studying it for several years, just on my own. Of course, I've studied it in school. I also went and got a certificate in developing economics, specifically in the case of China, from Peking University, which is based in Beijing. I did that online because COVID, can't go over there, and probably couldn't afford it anyways. So, I've studied their economy. I've studied their culture, their spending habits, their growth. I've put a lot of work into that. And I see China continuing to liberalize their policies, continuing to liberalize their culture, the way that people can spend their money, and they have a growing middle class. The Chinese people are becoming increasingly able to do things like go to resorts, travel abroad, and essentially waste their money. And because MGM is very uniquely positioned in China, I think that that's something they're going to be able to continue to take advantage of as China continues to liberalize and as the Chinese consumers continue to make increasing amounts of income and conversely spend more money. MGM is a really respected company. They have really high standards for what they do. They've got a great set of leadership. They have golf courses. They've got a lot of things that make them a prestigious company, that makes them a lot more valuable and as a result, a lot more prone to growth because of the decisions that they make, the way that they do things, and the standards that they hold. As far as kind of some technical analysis here, I want to talk about their PE ratio. So their PE ratio is 10.46. Now you might be asking, what is a PE ratio? You're kind of new to this. So the PE ratio is one of the very fundamental ratios that we use when we're valuing a company. I do actually plan on doing a video later in the future talking about how to do these ratios, kind of where they play into things. So all we're doing is we're taking the price per share and we're dividing that by the earnings. This is essentially a way of measuring the value of an investment. So generally speaking, the higher that number is, what it essentially means is you're having to spend more money to get a return on your money. So we can use Tesla as an example. Tesla's PE ratio is 1,678. So you're putting in a lot of capital up front to get your investment back. With MGM being 10.46, you're not putting up nearly as much capital for an investment like you are with Tesla. And that doesn't mean you should buy this instead of Tesla. I own some Tesla, and I have it there for reasons that I believe the investment is worth it. So that doesn't always mean that it's bad if the PE ratio is high. Generally, you want it to be lower, but it depends on your strategy. It depends on why you're invested in that company. So there are some times where a high PE ratio is not a problem. But in this instance, with MGM Resorts International, they have a generally low PE ratio, and that's pretty nice because that means that you're not having to front $1,000 before you're going to get any sort of return. If you're stuck between two companies, maybe they're even in the same industry, you have the same intention with both of them. Which one do you want to go with? The PE ratio can be one of the things that goes into that consideration process because you can see with company A, you're having to front less money for more of your money back, essentially. That is a 30,000 mile view of the PE ratio, very watered down, but that's kind of the bare essentials to it. Like I said, I want to do a video about different ratios and their role within finance. That's something that I think will come a little bit later on. Their stock is sitting at $30.83 per share. Their 52-week low was $5.90, and then their 52-week high was $33.78. So there is a little bit of fluctuation there, not nearly as much as with some companies, more than others. For me, I'm okay with that. I have a pretty high risk tolerance when I invest. So because I'm doing this long term, I don't really mind if the stock fluctuates a little bit because, I'm holding MGM for years and years and years before I plan on selling it. It'll probably be 10 years before I sell this, barring some sort of crazy circumstance. I plan on having this for a long time. So if the stock fluctuates a little bit, I use that as an opportunity to buy more of it, to be honest. When they dipped, I bought it. They dipped another time a couple months ago, I bought it again because I'm constantly trying to add MGM shares to my portfolio because I believe in their long-term growth, their long-term longevity, and the health of the company, and just their place within the industry. I would highly encourage you to look them up on Wikipedia for a little bit more general information if you'd like. I would also encourage you, if you wanted to see some of their financials, go to the SEC's website. You can find all of their financial statements that they have to publish there. You can look at their Form 10K if you want to see how they've been performing. I didn't want to get too into the weeds with that too early because I wanted to keep this a brief overview. If you guys want me to talk about them in more detail and go through some of their financial statements, I'm more than happy to do that. Just let me know in the comments. Thank you guys for watching this. I really enjoy it. If you could, I'm going to say the typical YouTuber thing, drop a like, a comment, share this. I'm taking a lot of time out of my schedule between school and work to do this stuff because I really want to help people become a little more financially aware. I want to capture that energy that you guys have after seeing what's been happening with GameStop and AMC and turn that into something meaningful and turn that into something that you can take with you for the rest of your life. I think that it's about time that investing becomes democratized. I know Robinhood likes to say that. I'm not sure that they do that, but I do believe in that sentiment. I think that common people should be able to take control of their finances, especially because we can't rely on Social Security, especially because my generation is probably never going to get to retire. So it's really important that people learn this. And thanks to technology, investing has become a lot more egalitarian, but you still got to learn about it. And so that's my goal here. I'm doing this for you guys because I want you to be successful. So please give me a follow. You can check me out on TikTok, Mr. Chris Chill. I also just set up an Instagram account. It's lofi.finance. So again, thanks for tuning in. You guys are awesome, and I'll do another video here soon.